Amazon just released their latest quarterly figures and overall a good quarter. Guidance was a bit soft, but AWS continues to grow and continues to have a reacceleration in growth as well. Advertising is slowing down a little bit, but overall to me, good quarter. Right now, stock is down 5.2%. We already covered Intel. Intel was down 14, 15, 16% or so. Horrible quarter. If you missed that video, it's going to be in the top right corner. But here, Amazon down 5.3%. To be honest, if it drops a little bit more, it's going to be quite close to the 200-day moving average. And I like to add whenever a stock reaches that point. So maybe that will happen. There's of course still some commentary left during the earnings call, so that might impact the stock. Let's first start with a comment from Andy Jassy, Amazon President and CEO. We are continuing to make progress on a number of dimensions, but perhaps none more so than the continued reacceleration in AWS growth. As companies continue to modernize their infrastructure and move to the cloud, while also leveraging new generative AI opportunities, AWS continues to be customers' top choice as we have much broader functionality, superior security and operational performance, a larger partner ecosystem, and AI capabilities like SageMaker for model builders, Bedrock for those leveraging frontier models, Trainium for those where the cost of compute for training and inference matters, and Q for those wanting the most capable generative AI assistant for not just coding, but also software development and business integration. So I think they are pretty confident that they will continue to see nice growth when it comes to AWS. And so for the quarter, we've got North America net sales at $90 billion, operating expenses $84.9 billion, and operating income $5 billion. Internationally, of course, that's what's dragging down the retail business a little bit. Last quarter was a bit better than this one. Internationally, net sales $31.6 billion, operating expenses $31.2 billion, so operating income only $273 million. As for AWS, continued acceleration here, net sales $26.28 billion, operating expenses of $16.94 billion, and operating income of $9.33 billion. If you're wondering what these numbers are here on the right, that's for the last 6 months. Now, before continuing, if you enjoy this type of videos and want to get updated on most of the earnings reports, make sure you're subscribed to this channel. We're also very, very close to reaching 50,000 subscribers. So thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so as for guidance, yes, we're already jumping into guidance here. Net sales are expected to be between $154 to $158.5 billion, growing between 8 to 11% year over year. As for operating income, that's expected to be between $11.5 to $15 billion. Now, as for the small hit, let's say, that the company is taking right now, let me just show you why it's important to look at the big picture. Quarter over quarter with companies like Amazon, doesn't really make that much sense to focus on little misses here and there. If you look at net income, the increase year over year, that's quite something, no? Going from $6.75 billion to $13.48 billion in 1 year. Basic diluted earnings per share, 66 cents, now $1.29. This company is becoming more and more profitable. Even if we look at operating cash flow for the last 12 months and free cash flow also for the last 12 months, operating cash flow $107 billion, free cash flow $52 billion, and growing. As for the different segments of the business, online stores $55.39 billion, that's up 5% year over year. Physical stores is up 4% year over year. Third-party seller services only 12% year over year, so clearly a deceleration in that segment. Advertising services has also come down now for the second quarter in a row, still growing 20% year over year to now $12.77 billion. Subscription services up 10% year over year, and AWS growing 19% year over year. So here we see a reacceleration in growth, so that's great. As for AWS specifically, it has an operating margin of 35.5%, so down quarter over quarter, but a nice increase year over year. Operating income, as we've seen, $32.89 billion, that's up 56% year over year, that's in the last 12 months. And operating income, $9.33 billion, down a little bit quarter over quarter, but up 74% year over year. So I think it's safe to say that Amazon, the overall business, is still doing quite well. Yes, Might be that the economy is getting extremely weak, and so companies like Amazon, because of the retail part of things, advertising side of things as well, things might get hit a little bit in the short run. But think again, if people do not want to spend a lot of money, they'll go to places that offer the best discounts, the best prices. Amazon is known for that, so I think they'll do quite well. And so overall, we've got here again Consensus Guru's great follow on X, the beats and the misses for the quarter, more beats than misses, small miss when it comes to revenue, 0.5%, so not that much. Internationally, also missed by 1.3%. We've got a miss in operating income for North America by 3%. North America operating margin, 17 basis points miss, and operating cash flow, a miss of 16.9%. So that's the biggest part. As for the third quarter, revenue missed by 1.4%, operating income missed by 14.2%, and operating margin by 127 basis points. So, like I said, overall, good quarter, but guidance was a bit weak. And so right now, if we're looking at the stock, like I said at the start of this video, if we can get closer to that 200-day moving average, which sits at $170 or so, I think that could be a nice area. Again, the stock can drop a little bit below on the weekly. Of course, tomorrow is Friday, so not that many days left for the trading week. But previously, as you can see, we did drop once under the 200-day moving average, but recovered. Let's see what happens tomorrow. But I do think that Amazon is still one of the best companies to buy in this market, despite the stock being up already this year quite a lot. But remember, this company is now becoming more and more profitable. And so that's about it for this earnings review. The next one will be about Mercado Libre, another very, very good quarter for that company. Stock is back up over $1,800. Yes, I know, when stock splits so we can buy more shares. Unfortunately, they're not really focused on splitting their stock, or at least not anytime soon. If you missed the Intel video, horrible quarter, I share my thoughts in that video as well. It's in the top right corner. After the Mercado Libre one, I will be talking about Block Square. Strong quarter, but we'll discuss that in another video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.